Welcome to the Blue Swan podcast. Today we are lucky to have Edwin Mata, who is the CEO of Brickken, which is an asset securitization and tokenization corporation based in Spain. So on that note, please, introduce yourself and anything you think is important.
Yes, absolutely. So thank you very much for having me. My name is Edwin Mata. I'm the CEO of the founder of Brickken. And as you pretty much said, we do tokenization as a service, which allows any company to be able to digitize and tokenize any financial instrument. So far, we have over 200 clients in 30 countries, and our software has been used to tokenize over 500 million. So very excited about the current times in the blockchain space.
That's an impressive outcome so far. One of the interesting things that Brickken does that a lot of the alternative trading systems don't is working with more of the intangible side, such as IP rights, royalties, and then in the luxury section of your page, there's also something about events. And so you can essentially securitize and tokenize different pass access types. And so like backstage access. Wonder if you'd be willing to touch on that because there were futures contracts in the entertainment industry a while ago, but the regulators essentially cut that. And I think that was way back in 2006 within the USA.
The times have evolved about securitization, not just about tokenization, no. And now, even at the regulatory type of level, they're trying to reduce the burden as to how things can be issued or who can interact, right? So in reality, tokenization is just another layer. So you go from something that is solid into something that can be multiplied 1,000 pieces, securitization, which now can have the format of a token, which is tokenization. All these business models for that create revenue can be tokenized. So the tokenization is not trying to replace this legislation because it's impossible. It's just trying to reduce the friction of the bureaucracy or of the paperwork. So if something is not legal per se to be securitized or offered to the public or doing in a way, then it won't be tokenized. So tokenization will never go against what is legal, what is not legal or is capable of. So, and that's the kind of like a big mistake we see in the market that people think that just by tokenizing, you don't have to comply with tech regulations, so to speak.
The key factor of a lot of the ATSs is that they work in conjunction with local securities laws that pertain to the country of registration. And so with that in mind, in terms of intangible securitization and subsequent tokenization, you mainly deal with just the underlying asset. And so like within something like let's say a copyright, there's a master's license, there's sync licensing, there's performance licensing, etc. And so you primarily deal with just the revenue underwriting for the overall asset in all cash flows pertaining to that asset, irrespective of the licensing agreements, or you can kind of change and tier the way it's kind of distributed within different distribution agreements within said asset.
So if you have a set of license and it can only be applied or you can distribute or you can do something, you still have to comply with the technology side of things. The word tokenization, what it's supposed to do is for that framework that works at the paper or at the cash flow of the real world to move it at fast speed. Kind of like once you have that settlement done or that kind of like one click distributes all dividends. Or if you want a capital fall, instead of going by one bank transfer, reconciliation, you do everything on the spot. Or if you want to settle something instead of looking into T+2 or anything, it's T0. So again, technology, the only thing that it wants to do with this type of capital formation or securitization or crowdfunding is just add that super efficiency layer that comes from that characteristics of blockchain. So whatever agreement you have offline, let's call it, that idea is that online and in the tokenized version, you can really put that into full automatization, so to speak.
One of the things that a lot of people within the entertainment community, especially in the Los Angeles area, aren't actually as aware of is what they can do with their IP, whether that is a film being produced or whether that is, individual songs that are being licensed. And so, what kind of advice would you have for them on utilization of platforms like Brickken for tokenization?
I think that you're touching on something that I really much like, because in the end, music and entertainment, it's what obviously everybody loves. And it's kind of like one of the hardest ones for IP owned by big monopolies, right? Kind of like it's kind of been a sector that is very like few players, three, four, five, versus in other ones that it's more open. And that kind of like alienates the thought of tokenization, because now you don't really need all these players, they really don't need the tech because they already have the distribution, the liquidity, the IPs, and everything. So here comes a new format that wants to disrupt, and it's capable of, because the same rules that applies to them applies to these people here in Europe. If you want to tokenize a football player, let's say, or the IP of a football player, you really can't, but it's not because of that technology. You can't because under FIFA rules, you need to comply with how the companies own, who owns the IP, how the distribution. So in that thought is, if a player wants to distribute or be owned by other entities, not just the retail, it has to be a company or accredited or whatever, they have to comply with the FIFA rules. So it's not that the tokenization is not capable, it's just that tokenization is only capable if the application of the FIFA rules for the IP of the football player are performed on the very strict layers, right? And in the United States, there's a big problem in my end, which is retail investment. It's very tight. When you want to tokenize something or securitize something, retail has to pass through many layers under different regs, and it's only a game for accredited investor, which 80% maybe of the population in the United States can't. So not because you're tokenizing, now you're going to have retail investors in your end, because you still have to comply with the SEC rules around how retail or investments are performed.
So you're primarily reselling under something like Regulation D instead of like Reg CF with a focus on accreditation.
You come with your framework, and the application that we had allows you to put that framework under that technology to start enacting how it's supposed to be. So if you're selling on a specific rate, we can block certain models for you not to fall in compliance. So if you cannot sell to retail, we force the KYC to be performed with an extra layer that you need to prove that you're an accredited investor. We format the technology for you to be compliant under the regulation that you're trying to enact the securitization.
So even for tokenized investment listings without a specified term sheet. There might be something like royalties. There's still an accreditation questionnaire attached to the offering. The authorization of an agreement to proceed with tokenization and distribution of royalties is much simpler for somebody who, may be a phenomenal artist with, Grammys and whatnot, but that doesn't have the same kind of red tape as somebody who needs to go through layers and layers of bureaucracy at a company like Universal. With that in mind, how does Brickken work with IP valuations? Do they have somebody go to an external IP firm to go over valuations, or do you do it internally and sort of underwrite existing royalties and whatnot? Sort of, how do you like to work with, smaller artists that might be like the equivalent of, let's say, a seed or a Series A stage private company?
On the valuation, we can help them by a calculator. We still help you with the best practices as to how you can value something or who you can reach for a proper valuation to provide trust to the market. We do have different partners across the globe, depending on where you are, who can come in and put their stamp that, okay, we have reviewed everything and your current valuation is X. And that valuation gets embedded even in the smart contract for people to understand that what they're buying, there's a certain link or a trust link between your valuation and the issue.
A lot of the time, people are going to be like tokenizing assets that belong to a specific corporate framework. And so, private equity, it's all C corps, but a lot of artists maybe be running it through an LLC or partnership. In some cases, it honestly might just be a group of people who have issued their names as individuals on some kind of an intangible, like a copyright. And so for the tokenization and distribute process to happen, is the corporate framework actually required, or is it really just the asset and the individuals jointly agreeing to tokenize and distribute what is produced from that asset that's required, because doing so modifies sort of the corporate veil and any kind of underlying liabilities.
That's a very good question. I don't think I've ever been asked that because in reality, people focus on the issue, the capital formation, the distribution, but on top, they forget the corporate governance. And that's crucial because whoever is under what rules or under whose capability is this happening, right? And then you can have like is it the sole owner or is it a company owned, the one that is tokenizing? So the tokenization, let's say at the first step or under the upper layer, it's corporate governance. And what we cannot go here because obviously then if not, we will have to have everything tokenized, digitized, and it's complicated. But bear with me because this is a very good thought, and I'm going to try to be very clear. So at the top, you have corporate governance, and then you have the tokenization, and then you have how it forms the rest. The corporate governance needs to already have pre-approved the tokenization. So at the execution phase, which is tokenization, it already becomes executable because we believe or we pre-assume that the corporate governance already allowed the framework to already work at the tokenized level.
Due to any sort of internal securities regulations that Brickken is forced to comply with, like it's not possible for individuals to tokenize assets.
Sole company, sole owner, sole director, where you don't have that middle, because whoever acts or says it's one person, it gets more complicated on other types of structures where you have a council or a set of people who you already have to pre-assume they got into agreement that tokenization was happening under such specific terms.
Brickken will do everything from a Picasso painting to diamond rings to film production or existing, songs that have been produced. And the scale of those assets is very, very, very different from biotech and high-tech startups that are going under a completely different kind of growth trajectory. Now, the way those assets are valued and the way that those assets continuously produce cash flow as a company scales and how that influences the equity price is a different story. But for assets like diamond rings and paintings, there's a very, very different set of progressions. And so how have you seen sort of customers enjoy the experience of investing and sort of reaping the benefits of that through different asset classes that Brickken offers?
When you invest in a tokenized version today, what people are looking is for the yield. What are my returns on this investment? And when you push the product, it is true that the asset matters, but people are not used to investing in different asset classes as in other spaces, unless it's a company that is already in NASDAQ or is something accessible to your bank or private bank. So we're just very limited in scope as to what asset classes we can invest in. Then suddenly with tokenization, this opens up. And this is good and bad because obviously more offer, but not as big supply of money can reach that offer. And what I'm trying to say here is that people are not worried so much about what is being tokenized. What they want to have is a secure asset, so something that is being audited, hopefully, or insured. And then the terms. What we're seeing in our platform is that there's a lot of different aspects being tokenized, but what people like is something that is very short, highly liquid, and with high yield. So it's kind of like the impossible asset.
You're allowed to include projected yields on the offerings.
I'm talking about our regulated issues with our prospectus. Like, and in other countries, this is way simpler because the United States has one of the biggest burdens as to how you issue or promote private credits with a yield opportunity. In other states of country, you can put it if it's an estimated one, because obviously if you can't reach the yield, then you go into all of these false advertisement and whatever, kind of like deal. So you still need to comply with the rules, but you can certainly establish that the yield generated from such offering may reach a certain threshold. If in that prospectus submitted or an on the rec, you're still allowed to.
How does the internal regulatory and compliance landscape within, let's say, like Spanish securities regulations or anything for the securitization and tokenization of assets impact the way that access is granted. And so, like, which countries can participate.
All right. So here in Europe, the on the MiFID tool, the whole regulatory aspect about issuance and securities and undistributed layer got renovated. And then there are directives every country then started managing and putting their own clause because a directive needs just to be complied with, but you can make some adaptations versus regulation in Europe. Regulation is how it is written at the top level, it applies everywhere. This created a bit of divergences between countries at the security tokenization level. All right. Some put more burdens, some rely on being more ease just to track more capital or innovation. Spain tend to be one of the more heavy, always regulated ones. And they put an intermediary, which is a tokenized version. And the ATS, it happens something very weird because they created a new figure that the ATS complies with, but the ATS had no technical capabilities to be able to perform the obligations stated by the regulation. So they had to go through a third party for them to become technology available or knowledgeable, for them to be able to provide tokenized offerings to the public. Okay. So we had a little bit of a problem, which still an ongoing big problem. But in the end, this also opened a lot of scope because let's say that the ATAs finally managed to jump themselves into the tokenized versions for them to be the intermediary between the issuer and the investor. But it also allowed European investors to jump in and under certain parameters, worldwide invest.
How do you see the landscape for derivatives to change within anything in terms of tokenization? Because there are cryptocurrency derivatives now, there's futures, there's options on futures for that. And so, but within something more esoteric, like, let's say, intellectual property or hard assets, like diamond rings or paintings, it's a little bit different. And so, do you actually see any kind of potential for derivatives to be made from those assets? Because the said derivatives are already essentially present within, licensing agreements. So, you have an option for the rights of an intangible asset like a patent or a copyright. You're essentially writing an options contract against that.
Again, an excellent question. The thing why derivatives work in a very highly liquid is because the asset itself is already measurable digitally. So you can grab derivatives again, digital assets because they were digitally created. And there's oracles measuring constantly the value, right? Or even against oil, like big commodities, oil, gold, there's already a huge liquid market, but the value of the gold or the oil can be measured almost instantly in real time because of the market being so big and liquid that you can create future options or derivatives on top of it. Now, what happens with some real world assets? You don't have that market. You don't have that valuation real time almost 24/7. So there's a possibility that you can create a derivative against something that may be true or not, but whose value absolutely drastically changes between, like, I don't even days, let's say hours. So there's a chance that you create a fake market. And that's why I'm always saying this out loud because derivatives on RWA, if they're being played at the same level that the rest of the market with the better conditions of information, liquidity, players, knowledge, and everything, then this market that is incipient, just being born, they might absolutely crush it just because we cannot compare one with the other. One is digital native with a bunch of information, and the other one is still relying on a lot of online information, offline onboarding, trying to measure every once in a while the value of the real estate or of the diamond. Diamond is not that liquid, even though there's a couple of highly concentrated market, but it's not the same. So I think derivatives on certain products need to be very cautious just because of how accessible information and liquidity is on other aspects.
Last question, before we wrap up. How do you see a sort of real-time measurement of sort of asset and equity valuations changing within tokenized ecosystems?
It's going to get way better thanks to AI, because right now you need everything to be real time. That's the whole problem with the tokenized version, because it's like T0 24/7 market. And that's the problem when you have to measure something that is not fully digitized, that is still depend on human sort of valuation. But I believe in the future, with even AI agents running all around the world looking for data, or you being able to submit your data or put your financials to certain data, then it can be a continuous information threshold. Because in reality, not every company has the power of an IPO. So if you're starting, people may judge you against the same caliber than a publicly available company, and that may play against the interest of everybody.
There are a lot of very, very complex frameworks within tokenization, and it's important to kind of know how the ecosystem is evolving.
It was a very high level, nice conversation. I usually have other types of podcasts, so I really enjoyed this one. Yeah, thank you very much. I hope people understand more what we're trying to do, where do they see a market. But if I can end on something, it's like even this incipient market, it might take 5 or 10 years, but in the future, all will be digitized. I think we're getting to a mass digitization where there's going to be a lot of value being extracted for private blocked markets just because they were never available to be publicly. And I think there's going to be continuous unlock of value. So I think we're really going to be living in a tokenized world in the next 10 years. I have zero doubt.